Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top stories. Reserve Bank of India Governor calms nerves over the withdrawal of the 2,000 rupee note, says banks will make the process painless, refuses to commit to what comes after the 30th of September. Confusion over how much money can be exchanged in a day. DEA Secretary tells Business Today TV that any number of exchanges is possible. Banks say otherwise. Adani stock zoom for a second day, gain 82,000 crore rupees in market cap and give LIC's portfolio a 3,450 crore rupee lift. Also power Sensex and Nifty into the green. IT heavyweights also part of the rally. Big win for Go First at the Bankruptcy Appellate Tribunal. NCLAT upholds the airline's voluntary insolvency petition. Aircraft lessor is told to approach the NCLT again. BSNL issues advance purchase order worth 15,000 crore rupees to TCS-led consortium group to deploy 4G across India for the government-owned telecom company. European Union hits Meta with a record $1.3 billion fine for its handling of user information, given 5 months to stop transferring users' data to the United States. Three days after announcing the withdrawal of the 2,000 rupee banknote from circulation, the Reserve Bank of India governor broke his silence to calm nerves. Addressing media just before his meeting with PSU bankers, answering several questions, reiterating the central bank's stance that the 2,000 rupee note will remain legal until after October.
ये इकोनॉमी के ऊपर इसका impact will be very marginal. I'm saying very marginal because it's only 10.8% of the currency in circulation, and as you know, 2,000 rupee notes were not commonly used in any transactions. I have not seen, or in fact anecdotally, and we have done also some informal survey in various locations in India, we have found that hardly it is used for carrying out, hardly 2,000 rupee notes are used for carrying out transactions. So therefore economic activity will not be impacted. देखिए 2000 का नोट तो लीगल टेंडर है ही, हमने नोटिफिकेशन में कहा है, बिल्कुल साफ कहा है कि 2000 का नोट लीगल टेंडर है। बाकी जो खरीदता है, जो बेचता है, उनके बीच में कई समय ऐसा होता है कि कोई दुकानदार के पास मान लीजिए चेंज नहीं है, तो हम कैसे, इसी आपका प्रैक्टिकल भी आपको देखना पड़ेगा, लेकिन 2000 का नोट लीगल टेंडर है। Whatever difficulties and concerns are there which people have, especially including the people who are at the moment living, staying in foreign countries, we will address all those concerns, and it will be our endeavor to ensure that the whole process is smooth and without any difficulty. The banks have been advised. We have issued further circulars yesterday to the banks to make necessary arrangements, including arrangements to ensure that the people do not stand under the hot sun in this peak summer, to make arrangements for drinking water. But I do not expect the kind of a rush in the bank branches. Through you, I would like to appeal to all the viewers. There is no reason to sort of rush to the bank. Take your time. 4 महीने की समय दी गई है, आप आराम से 4 महीने के अंदर जब भी आपको सूटेबल होता है, आप नोट एक्सचेंज करिए। आरबीआई तो कोई स्क्रूटिनाइज नहीं करता है, बाकी जो एजेंसीज है, इनकम टैक्स वगैरह हो, वो तो अपना नॉर्मल प्रोसीजर फॉलो करेंगे। जैसे मैंने कहा कि वो 50,000 के ऊपर कोई अगर टैक्स होता है तो वो तो अदर एजेंसीज के ऊपर डिपेंड करता है वो क्या करते हैं, लेकिन आरबीआई के तरफ से हम ऐसे मतलब किसने क्या ये किया, हम आरबीआई के तरफ से नहीं उसको नहीं करते हैं। जैसे आपको पता होगा बैंकों का एक रिपोर्टिंग सिस्टम है जिसको सीटीआर, एसटीआर वगैरह कहते हैं, आपको सबको पता है, वो तो मॉनिटर करते हैं। You have also raised questions about why time is given up to 30th September. You see, unless you give a particular time, unless you specify a particular time, the process will not reach a stage of finality. And you have to give a time so that the announcement is taken with the seriousness. You know, it is taken seriously and people come and exchange their notes. After 30th September, yes. What? Now we expect most of the notes to come back. That is our expectation at this stage. We will see how much notes come back. And as we approach 30th, we will decide, at that stage. And the legal tender character, we have said that it continues. We have not said that, this will happen or that will happen.
Business Today TV spoke to the chairman of India's largest bank, the State Bank of India, to understand the real impact of the withdrawal of the 2,000 rupee currency note. Dinesh Khara, the bank CMD, started out by explaining how the exchange process will work.
No, I don't think so, because, as I mentioned that, significant part of the transactions are now being handled by UPI. So whatever currency is there, yes, of course, some augmentation will perhaps be required. But I think to a greater extent, the currency need for exchange, that will get addressed through the UPI mechanism. And of course, people who hold some currency as a store of value, for them, they might be looking for the alternate options, which could be the currency in the other denomination too. Because as I mentioned that even now, from 2019, this 2,000 rupees currency note printing was stopped. And gradually the proportion of the 2,000 rupees currency note in the total currency was coming down, and it has come to a level of from somewhere around 50% in about 16, 17 to it has come to a level of about just about 11%. So that very clearly means that there is going to be it's going to be a digital economy, and physical cash may start losing its relevance at a point of time.
That's a good point, and the point that you made about UPI and the numbers are actually eye-opening. Mr. Khara, is the 500 rupees note going to be the highest denomination in a digital banking economy like India, or do you think there might be a need for a higher denomination, perhaps a return of the 1,000 rupee note at some point in time?
I think maybe we'll have to wait and watch to gauge the ultimate reaction from the customers. And once we have some kind of picture, I'm sure RBI will be responsive enough to meet the expectation and the requirement of the economy.
Very quick point on the retail borrower. For them, is the cost of borrowing going to now remain stable, or is there a potential for any hikes in the near future?
Looking at the global trends and also the way the central bank is evaluating various situations, I think to my mind, now this policy pause is expected to continue for another quarter or so. And we'll have to probably wait and watch of how the economy looks like at the material point of time, which will eventually help us in taking a call for this pause become a pivot.
Business Today TV also caught up with Ajay Seth, Secretary, Department of Economic Affairs, outside North Block this morning. In the exclusive conversation, the top-ranked Finance Ministry official answered one of the biggest questions that everyone is asking after Friday.
The fact that you have asked people to deposit and exchange it with smaller denominations until September 30, does that impact financial transactions or cash flow in any way?
So the RBI has introduced this this matter as a part of their clean note policy, and it will not have any impact at all. In fact, it will be neutral as far as money supply is concerned. One can deposit now and withdraw it the very next moment or next day, as and when the money is required by them. And those who want to exchange it without depositing it in their account at a time, they can exchange it for a smaller denomination for 20,000 rupees, and they can do it several times in a day. So we don't expect any impact on the economy at all, because it is a money supply neutral measure.
Sir, and the fact that suddenly there's so much of liquidity in the system because of the RBI surplus and because of your 2,000 rupee coming into your system, do you see any impact on the market? Do you see your cost of borrowing going down?
See, the objective, as stated very clearly by RBI, is a clean policy. These notes were issued more than 5 years back, and so that the clean notes are available to the public. That is the objective. There is no other objective of this exercise.
Now, tomorrow morning, and there will probably be long lines outside banks for those wanting to exchange their 2,000 rupee notes. But despite the clarification issued by the Secretary, Department of Economic Affairs, as you just heard, confusion continues to prevail with banks following their own rules. There seems to be no consensus on how many times you can exchange the 2,000 rupee note in a day.
Just hours to go before the exchange of 2,000 currency notes begin in banks across India, rekindling memories of long queues and hours of waiting outside bank branches.
There is no reason to sort of rush to the bank. Take your time. 4 महीने की समय दी गई है. आप आराम से 4 महीने के अंदर जब भी आपको सुटेबल होता है, आप नोट एक्सचेंज करिए.
And despite these assurances by the RBI Governor, big questions still remain. While it is clear that you will be allowed to exchange a maximum of 10 2,000 rupee notes at a time, it remains unclear how many times you can do it in a day. Business Today TV asked the top finance ministry official and was told this.
Those who want to exchange it without depositing it in their account at a time, they can exchange it for a smaller denomination for 20,000 rupees, and they can do it several times in a day. So we don't expect impact on the economy at all.
Except account holders of HDFC Bank received this email Monday morning. The email says the 2,000 rupee denomination note will remain legal tender and can be deposited in any branch till 30th of September. It, however, muddies the waters by adding that the notes can only be exchanged once a day. Even the country's largest bank, SBI, is vague on this front. Its guidelines to branches only says that 20,000 rupees can be exchanged at a time without addressing how many times a day. Importantly, the limit of 20,000 rupees applies only to exchange and not deposits in your account. The deposits are still governed by the existing KYC rules, under which you will have to furnish your PAN card for cash amounts more than 50,000 rupees a day. Also, cash deposits of more than 10 lakh rupees a year in saving account and 50 lakh rupees a year in current account will be intimated to the Income Tax Department by banks. The RBI and the Finance Ministry have interestingly been at pains to point out that there is no other purpose to the withdrawal of the 2,000 rupee note than the clean note policy. This is only reiterated by the RBI order that no proof of ID is required for exchanging the currency notes. Bureau Report, Business Today Television.
Significant gains in shares of Adani Group companies along with gains in information technology stocks pulling the markets from early losses, pushing them higher throughout the session. In fact, Sensex up over 200 points, Nifty up 100 points. In fact, top gainers today, Adani Enterprise, Adani Ports, Divi's Labs, Apollo Hospital and Tech Mahindra. 20% on Adani Enterprises today. The top laggards, Hero MotoCorp, Axis Bank, Nestle, Eicher Motors and Bharti Airtel. Shares of Adani Group companies surged, gaining a massive 82,000 crore rupees in market cap. All 10 listed entities settled on a strong note, with 6 hitting the upper circuit and Adani Enterprises skyrocketing nearly 19% to close at 2,326. The rise follows two triggers. One, the Supreme Court panel report giving it a clean chit in the Hindenburg case, and the other, a report that the group may consider monetizing select real estate assets. My colleague Sakshi Batra talked to Vineet Bolinchkar, Head of Research, Ventura Securities, about the outlook on the group stocks. Listen.
How do you see the Adani Group stocks? Is it safe to now invest in Adani Group stocks, or is there still some more uncertainty or some more walls of worry to be climbed going forward?
So, there will always be uncertainty with respect to investing in stocks, right? So, in a perfect secure market, there is no risk and then there is no gain. So, I believe that the risk factors will persist, But I'd like to make 3 or 4 points which I think are at the bedrock of the post-Hindenburg story, and why I think that the valuations are a compelling buy for the sector as a whole for the group. So number one is that the SEBI clearance is coming in, which clearly indicates that there is no corporate misgovernance that took place, right? And the stocks fell purely because of external factors. They're nothing to do with the business. So with the external factor being minimized of risk, I think the stock should climb the walls of worry. Second thing, what has happened is that, in the mayhem that ensued, the Adani debt, which was listed internationally, the management has gone and done certain buybacks, right? So these buybacks have been done at distress levels, and that purely tells you that they will have to pay lesser debt going forward. So to a certain extent, the leverage has been lightened. Third factor is the fact that, there was a lot of uncertainty among investors, about the veracity of the business, etc. Because the Adani shot into the limelight very quickly. People did not get a chance to look at them. So now I think, it has gone through a microscope of evaluation of all aspects of the business. And with the, clarifications being given by the group and all is hunky-dory, business is sound. And, we are going to see a stamp of institutional investors coming and buying because all the clouds around the stocks have been cleared. Fourth is valuations of the company are absolutely at distress levels. And finally, the fifth point that I would like to make is that they will now have access to growth capital. They have prioritized allocation of the growth capital. So, the group has emerged even more stronger. So you have a high growth company in the infrastructure sector with very, very abysmal valuations, making it a screaming buy from this point.
The countdown to 4G services of BSNL has begun. The government-owned telecom operator has issued an advance purchase order worth 15,000 crore rupees to a TCS-led consortium. The consortium includes TCS, Tata Elxsi, Tata Communications and Tata Group's telecom gear-making company, Tejas Networks. BSNL is lagging far behind its privately owned competition and has not yet launched its 4G services. The government earlier this year announced it will invest as much as 53,000 crores to roll out 4G and 5G services for BSNL. Meta has been hit with a record $1.3 billion fine by the lead privacy regulator in the European Union. The Mark Zuckerberg-led company has been fined for its handling of user information and given 5 months to stop transferring users' data to the United States. The fine imposed by Ireland's Data Protection Commissioner concerned the continued transferring of personal data by the Facebook parent and topped the previous €746 million record EU privacy fine on Amazon.com in 2021. Meta has said it will appeal the ruling, including the unjustified and unnecessary fine. Danny Cyril de Cruz of Business Today taking us through more on this.
Yes, absolutely. It is a major blow to Meta. European Union privacy regulators have hit them with a staggering fine of $1.3 billion. The Irish Data Protection Commission announced this verdict citing Meta's transfer of user data to the United States. The Commission found that Meta's data transfers did not adequately address these risks. Now, Meta has been given a 5-month deadline to halt any future transfer of personal data to the US. They also have 6 months to put a stop to the unlawful processing and storage of transferred EU data in the US. I should tell you, the new EU ruling applies only to Facebook and not Instagram and WhatsApp, which is also owned by Meta. Meta said it would appeal the decision and there would be no immediate disruption to Facebook service in European Union. While the ban was anticipated, the impact has been softened by a transition phase outlined in the decision. Additionally, a new EU-US data flows agreement can be put into effect as early as mid-year. This could provide some relief to Meta. Concerns were raised about the safety of citizens' data once it reached US servers. This is not the first time Meta is facing expensive fines from EU. Under the General Data Protection Regulation law, the company has been fined €390 million in the month of January for forcing users to accept personalized ads as a condition of using Facebook. In November, it was fined another 265 million euros for a data leak.
All right. Now, IFCL, the largest infrastructure financier in the country, has called for an infrastructural law to push investments and execution of projects. The company also claimed that NPA is one of the biggest hurdles in the sector, have peaked and are on the decline. Siddharth Zarabi, managing editor of BTTV, spoke to MD of IFCL, Mr. Jaishankar, and started out by asking him about the delays in projects and project execution risks.
The other factors that end up delaying projects and making them unviable and contributing to non-performing assets.
You're very right that construction risk occupies the center place as far as the project viability and project feasibility is concerned. And the construction risk itself, as per se, also has undergone a lot of transformation, because the way in which the project execution was handled a few years ago, or maybe a decade ago, it's no longer the same. And at the same time, this also is largely dependent on what kind of concession mechanisms and what kind of contract mechanisms are employed for the execution of the roads, or for that matter, if I may extend it to the infrastructure sector itself, because it also depends on different other sectors. Now, private investments are very important for the scaling up of our sector, and therefore public-private partnerships entail concessions, and those concession terms and the concession covenants, they largely have a lot of bearing on this. Over a period of time, the government has a lot of structural reforms, set in motion, number of measures and reforms, changing a number of clauses, making it much more market-oriented, and making it much more investor-savvy, particularly in the last 5 years, I should say, and that has, led to a large-scale reduction in the construction risk as such. Therefore, this has been one of the major factors why the non-performing assets of the lenders also has peaked, and it's no longer we see a number of fresh slippages in the accounts. So that is one part, and the other part is as far as the future is concerned, there is still a long way to go, because there are still a number of measures which are welcome and which perhaps will be needed to take the infrastructure sector to the next scale, to the next level. Those reforms probably include some in the product sense, like the project completion risk insurance, or for that matter, traffic, consultants' ratings, where the variations between the actuals and the projected ratings can be amplified to bring more confidence amongst the investors and promoters, and many such reforms like the tripartite agreement, which needs to be put in place, where lenders also can be a party to the concession agreements. Presently, lenders are not party to the concession agreements, which keeps them out of formal interactions between the concessioning authority and the concessionaire. So I think these are all futuristic measures which can be put in place in order to take the infrastructure sector to the next scale.
That's where we leave it on the show tonight. Thanks so much for watching.